teacher Jonna of Accountancy, Business and Management. Welcome to our class in Fundamentals of Accountancy, Business and Management 2. We are now working towards the fourth week of our online classes. So, what's up with you guys? Are you coping well? I have prepared three video lessons in the past 3 weeks regarding the preparation of the statement of financial position or the balance sheet and the preparation of the statement of comprehensive income, also known as the income statement. And after each video lesson, there is an exercise that you need to work on. I know some of you have tried answering them, but if you failed to balance them, don't get frustrated. That is why I'm here to guide you all along. So now, take your pens and your notebooks and join me in answering exercises 1, 2, and 3. Now let's start working on our activity 2. Are you now ready? Okay. So for our activity 2, we are required to do the following. First, we need to analyze the simple transactions, to analyze the entries, prepare the ledger, and the trial balance, followed by the statement of comprehensive income and the statement of financial position. You can use any of the two forms, the single step or the multi-step approach. The activity 2 contains 8 transactions. So we're gonna solve 8 transactions with an adjusting entry at the end of merchandise in the amount of 10,000. Okay, we will discuss it one by one. And transaction number 1 says invested 500,000 for his trading business. So this is an investment transaction. During an investment transaction, you debit the cash here because it was a cash investment. Your asset account was increased due to the cash investment of 500,000. And take note, asset has a normal debit balance. And when you increase it, what do you do again? Correct, you follow the normal debit balance in increasing it. Okay, since again it is an investment account, an investment transaction, you have to acknowledge an increase in the equity account of the owner by the amount of 500,000, and an equity account has a credit balance. Next, transaction number 2. Bought equipment for cash 150,000. Again, when you bought the equipment, there is an increase in another form of asset called equipment. Asset has a debit normal balance, and when you increase the asset, you follow the normal balance. So when you debit it, because there is an increase in cash in the no, there is an increase in equipment by 150,000. And because you bought the equipment, there was disbursement of cash. So when you disburse cash, you decrease your asset by 150,000. And since asset has a normal debit balance, when you decrease it, what do you do again? Correct, you do the opposite. So you credit cash because of the decrease of cash in the amount of 150,000. Then transaction number 3, borrowed 2 million at the bank. So during these transactions, what are the accounts affected? Okay, when you borrowed money from the bank, what happens to your cash? It increased because you received loan. You received the proceeds of the loan. Okay, so your cash account will increase by how much? By the loan amount of 2 million. And because you receive cash through a loan, that means you incurred liability account. So you credit loans payable to the bank And since loans payable is a liability account, it has a credit normal balance. And to increase your liability, what you do again? You follow the normal credit balance. Next, we have receive cash sales 3 million. So the trading company generated sales of 3 million. So the accounts affected again are when the company generated sales, naturally you receive cash. So the account affected number one is cash by amount in the amount of 3 million pesos. But the sales transaction is a credit normal balance, so you credit your sales in the amount of 3 million pesos. Next, we have you paid Meralco 5,000. So that's an increase in an expense gives us a debit balance. So meaning when you can decrease your income through expenses, so an income has a credit balance. When you decrease it, you do the opposite. So an expense has a normal debit balance. So you debit utilities expense in the amount of 5,000, and because you paid the utilities, then there was a decrease in the cash. So to decrease your cash, which is an asset, you do a very good, you do a credit cash. Next, number six transaction, the owner withdrew 10,000 for his personal needs. We know that an equity account has a credit normal balance. To decrease your equity, what do? You withdraw money from the investment. So another term for your withdrawal is drawing account. So when you decrease your equity account, you do a debit because an equity account has a credit balance, and to decrease it, you do a debit. So drawing account is a normal debit balance. In this case, we debit it in the amount of 10,000. And when you released the 10,000 to the owner, you have to decrease your cash. So to decrease your cash, since cash is an asset and has a normal debit balance, to decrease your cash, what do you do again? Correct. You do a credit. So we credit 10,000, you credit cash by 10,000. Next, we have purchased merchandise 70,000, paid half, and the other half on account. So we use the purchases account when we purchase goods to account for the cost of the goods that we bought. So we debit the purchases in the amount of 70,000, and since we paid only half, we reduce our cash account by the amount we paid, which is 35,000. And the other half was a liability account because we didn't pay yet for the other half of the purchases. And a payable has a credit account. That's why accounts payable is on the credit side. Next, we have you paid half a bank loan. How much was the bank loan? I think it was 2 million. So when you paid half of the loan, that means your existing liability, which is a credit normal balance, was decreased by a certain amount. So to decrease your liability, again, what do? Correct. You debit your liability account by half. So you debit your loans payable to the bank 1 million, and then because you paid money to the bank, you decreased or you reduced your cash account by 1 million. Next, we have the next transaction is okay. The adjusting entry. We have to take note in the preparation of our balance sheet. We have to take note of the adjusting entry of the merchandise inventory in the amount of 10,000, which is also close to the income summary. Now we are ready to do the ledger. In this case, we will use only the T account for our practice purpose. And in our transactions, you will notice that The only accounts affected or has many movements are cash and the loans payable. The numbers on the left indicate the transaction number. Opposite the transaction number is the amount involved. So you will notice in cash, transaction number one. What is transaction number one? I think invested 500,000 for his trading business. So you debit cash 500,000 and credit. You will notice a credit number two. That means two is transaction number two. In some ways, you also use the dates, but in our case, we use transaction number. So transaction number two, bought equipment for cash in the amount of 150,000. So this was the transaction when we bought the equipment. So the numbers on the left are all the transaction numbers. Opposite the numbers on the left are the amounts involved in the transaction. Then we get the total debits and the total credits, and the balance is the one with the highest figure. So in this case, 5,500,000 is on the debit side. We minus 1,200,000. Therefore, we have a debit balance of 4,300,000. So with the loans payable, this is transaction number three. If you will notice number three, 2 million. That is the transaction when the trading company borrowed money from the bank. And again, it was credit side and it was debited on transaction number eight when the company paid half the loan. Okay, so there is a credit balance of 1 million pesos. Next, we will show again the ledger balances of accounts. The cash account and the payables account moved, or meaning there were changes in the cash account and in the accounts payable, bank loan payable account. The rest of the accounts did not have changes, so we just write them as it is. After preparing the ledger, we are now ready to go to the trial balance. What is again the purpose of trial balance? Yes, to check on the correctness of your debits and your credits. All the accounts with normal debit balance should be placed where? In the debit column. All the accounts with credit normal balance should be placed on the credit column. So in this case, our our debit accounts are cash, purchases, equipment, utilities expense, and the drawing account. And for our credit balances, we have the sales, the bank loan payable, the accounts payable, and the equity. And notice also that your debit is always equals the credit. Okay, now let's go to, after having finished your trial balance, you are now ready to prepare your income statement. So normally we prepare the income statement first, followed by the balance sheet. Because in the income statement, we need to determine the income which we are going to close in the capital account later on in the balance sheet. So for our sales, we have 3 million, purchases 70,000, less the ending inventory of 10,000. We get a cost of goods sold of 60,000, then it will realize a gross profit of 2,940,000. Our expenses is for the utilities, so less the 5,000. Now we have a net income of 2,935,000. What do we do with the income accounts? I talked about this a week ago, 2 weeks ago, I think. So we have to close this to the we have to close this to the income summary and finally to the capital account in the balance sheet. So when we prepare the income statement, no, I mean the balance sheet. Oh, I mean I have one thing to discuss. This, if you notice the heading of the income statement, I highlighted for the year ended. Okay, don't forget that. When you prepare the income statement or statement of comprehensive income, you always attach the word for the year ended, for the quarter ended, for the month ended, for the week ended, whichever is applicable. Because we have learned that accounts in the income statement are nominal accounts. So these amounts are temporary. They're only good for the accounting period we are preparing. But but in the balance sheet, what figure or what words do we attach on the heading? You may attach the word as of, or just do not use the as of if you wish to. But in the balance sheet, we show again the assets. What type of report is this? Correct. The report form balance sheet, because the assets are on the top, followed by the liabilities and the owner's equity. So you will also notice here the merchandise inventory. That's the ending inventory at the end, which we added into the asset account. Okay, so we have a total asset of 4,460,000, and the liabilities of total of 1,015,000, and the equity beginning of 500,000. Remember the initial investment that becomes your equity beginning. Then followed by we deducting your drawing account of 10,000, the drawing of the owner, plus the income. See, you will be using the net income derived from your income statement. So we added here the net income of 2,935,000, and lo and behold, we have the equity at the end of 3,425,000. And what is again our accounting equation? Assets is equal to liabilities plus capital. So 1,015,000 plus the total owner's equity of 3,425,000, it will give us a total liabilities and equity of 4,460,000. Thank you so much for participating in this exercise. And if you have reached this stage, congratulations! You deserve a reward. You know what? I'm still thinking of what reward I can give you. But for now, I'm so happy that we reached this stage. That means you are able to prepare the income statement, the balance sheet from the scratch, from beginning, from the analysis of transactions to the ledger, to the balances of the all the ledger accounts, to the trial balance, and finally to the balance income statement and the balance sheet. Okay, that's all for now. And I want to see you on our next exercise. I really thank you for watching, and I hope you're enjoying your accounting. God bless everyone. Oh, oh my goodness. I have to repeat it again.